People are asking me all the time, Sal, what structure works if I'm a Canadian and I want to expand into the US? What's going to avoid double taxation? What's going to make me stand out in front of the banks, the lenders, and what's going to make sure that I go into the US and I'm killing it and I'm crushing it? I've got tons of clients that I've helped with exactly that. I'm going to talk about this in this video, what works, what doesn't work, and first-hand experiences doing exactly what I just talked about. What I will say is that watch this all the way till the end, because I've had a client that's got fined $25,000 by the US government for taking the wrong structure and not knowing any better. So go through this, and if you've got any questions, happy to talk about it. Let's get started. Let's start talking about the most simplest structure. Just using your Canadian corporation to do your business in the US. You've got US clients, your business is based in Canada, you probably already have a corporation in Canada. Why not just use that to start your business over there, right? You can still take on US clients, you can still have a US bank account. And I'm going to make a separate video on that. Mr. Editor, if you can put that somewhere here or there, and then you guys can obviously check that out on how you can make a business bank account for your Canadian corporation without any US registration. You don't even have to set foot on US soil, right? That's the most simplest option. I definitely recommend that. And if your clients are happy with it, definitely go for that. The benefit of doing that is that you're familiar with the Canadian system. You don't have to register for any IRS. The IRS obviously is the Internal Revenue Service of the United States, right? You don't have to pay any taxes to the US government. You do everything that you're currently doing with your Canadian corporation, right? And how that's allowed is basically the US-Canada tax treaty says that if you don't have any permanent establishment in the United States, permanent establishment just means that you don't have any US employees, you don't have any US warehouse, office, or anything like that, you can continue to operate out of Canada and you're only going to be taxed in Canada, even if 100% of your clients are based in the US. So definitely recommend that, the most simplest option. Because hey, who wants to pay for a US entity, set that up, do tax filing every year, pay an accountant to do that, and just have the headache that, there's US tax obligations as well, right? Just avoid that completely. Now, I will caveat that by saying that, for example, one of my clients, he did have to do all of that. He did have to register the IRS. He did have to file US tax returns because he was going into the United States and doing his business there. In his case, he had a cookware company. So basically they were making pots and pans that they were going to trade shows in the US and physically selling in the US, right? Obviously, if most of people don't have that scenario, they're just going to be sitting at home in Canada, interacting with their clients, doing business in Canada. And so they completely don't have to do any US taxes or anything like that for the Canadian corporation. Let me still mention, if that is you and you do have to go to the US, you would be required to file 1120F. That is a corporate tax return in the US for foreign corporation, the F being for foreign, right? For that, you'll need an EIN, and that's a different story. We can talk about that in a different video. So whilst I'm saying all of this, I do want to caveat this by a little bit by saying one thing. Do understand here that if you don't have a separate US business, and if you're interacting with your clients and you're transacting with your clients just from your Canadian corporation, do understand that if they were to sue you, they would be suing your Canadian corporation. You also have Canadian clients and you have US clients. All of your assets, all of your investments, or all of your cash that's sitting in your corporation is just in one corporation, right? If you want to sort of separate those two out, so separate out US, separate out Canada, just in case if somebody was to sue you, then they're only coming after your US cash, your US assets, then, that's not really happening with the Canadian corporation, right? But even in that case, that can still be avoided. What you can do is you can create a holding company. What a holding company does is that, let's say you have a consulting business, it's doing your consulting, it's marketing out to your clients and sort of doing all of the income that's producing activities, right? At the end of the year, you can take that and flow all of that income, all of that cash back to a holding company B, right? That's going to hold all of that cash at the end of the year. So if somebody was to sue you one day, or for any reason you have any obligations, they would only be able to come after what's remaining in company A, right? Company B still has all of your funds, all of your investments, and all of your other sort of jazz, whatever you want to have, right? So whilst I did say that having just a Canadian corporation might be a bad idea, it's not so bad if you have a holding company, right? So it still saves you from having any US tax obligations or having to do any setup in the US, right? And I already said this, if you want to open a US bank account, I have a different video, so definitely check that out. The other downside of having a Canadian corporation is that some of your US clients might not be so happy with the fact that you do not have a US entity. I've heard that some US companies do not like the fact that they're dealing with a foreign company, right? They just don't trust it the way they would trust a US LLC or a US corporation, right? So then only in those scenarios I would recommend that, yeah, you do open a US corporation or a US LLC, but otherwise, definitely a Canadian corporation would be a good idea. So let's talk about tax forms for that, right? Nothing. Literally, you're doing whatever you were used to doing. A Canadian T2, which is a corporate tax return in Canada. Now, I did mention if you're physically going to the US, then you're going to have to file an 1120F, which is a corporate tax return for foreign companies in the United States. You'll need to get an EIN, which is an employer identification number for the United States. And that's just the same as like a business number in Canada. Now, one small thing here is that when your clients, when your customers are going to pay you, they might want to withhold some taxes and give that to this IRS over in the United States. But you can definitely avoid that completely by submitting a form called W8BEN-E. A very simple form. If you don't know how to do it, let me know in the comment section. I can definitely make another video where we can just go through that form and I can explain step by step how to fill it. You provide that to them and you tell them that, hey, according to the US-Canada tax treaty, I don't have any permanent establishment in the United States, so you don't have to withhold any taxes. I'm going to pay all my taxes in Canada. And then it's completely fine. They're going to give you all the money. So this sort of setup is good for anybody who's running like a Shopify store, an Amazon store, or any service-based business, consultants, for example. You're good to just continue like that, like with a Canadian corporation. Number two is a US LLC. I do not love it, but it's only here because of the sheer amount of misconceptions around it. A US LLC is the most prominent and most favored type of structure in the United States. Americans love it, but unfortunately for Canadians, it's a very, very bad choice. But I'm also going to explain why it works for some Canadians. So a US LLC is considered a pass-through entity in the United States. By that, I mean that it's not taxed separately. It's taxed in your personal US tax return, which is called a 1040 or a 1040 NR. In Canada, because it's called an LLC, a limited liability company, it's actually treated like a corporation. So when you pay any tax to the IRS in the United States, it comes on your personal tax return. When you try to show that to the CRA, saying that I've already paid this many thousands of dollars of tax, the IRS says, well, that's not you paying anything for the corporation or the LLC, that's you paying for yourself, right? And you can try all you want to explain to them that the tax I paid was for the LLC and it's a flow-through entity. It flows through into my personal tax return. And that's why I paid it in my personal taxes. They're not going to take that as proof that you've paid the IRS for the LLC, right? It's basically called taking foreign tax credits. The CRA will not honor those foreign tax credits. Meaning you might end up paying, say, $10,000 to the IRS, and you might end up paying another $10,000 to the CRA for that exact same income. I did say that I'm going to explain why it's fine for some people. Basically, you're able to charge a management fee to nil out the profits in the LLC and bring all those funds into Canada. It's a long topic. I don't want to make this video too long, but I have explained this in a separate video. If my editor can put it somewhere here, then you can obviously go in and check that out, right? Now, one more thing before we get into the next topic. I am a new YouTuber. This is very nerve-wracking for me. I would highly appreciate if you can like the video and you can subscribe to the channel because two reasons. One, is going to show me that I'm doing the right thing for the right people and it's actually getting to benefit you. Second, when I make more of these, you're going to see them and you're going to automatically get notified. I do want to say that if you're finding any benefit from this video, definitely subscribe to it because the more I make of these videos and you're subscribing, you're going to get all of these notifications and you're going to get stuff that's going to save you possibly thousands of dollars in tax, right? I've had a client that literally paid $25,000 in penalty because they set up the wrong structure, right? You can save yourself from all of that by literally just watching this video, right? And yeah, please like it and comment and let me know if there's something you want me to make more of. Number 3 is an S-Corp. An S-Corp is a special US corporation with pass-through taxation. Very similar to a US LLC, but it does have additional benefits. I'm not going to delve into it too much because it's only available to US citizens, US green card holders, or basically anybody with a SSN, a social security number in the US. That's probably not most people that are in Canada, so I'm going to just gloss over it. If you are one of those people, you can definitely start with an S-Corp. It's going to avoid FICA taxes, which basically means you don't have to pay any Medicare or any social security when you take the money out of an S-Corp. If you're an LLC and you're one of these people, a citizen or a green card holder, or you have an SSN, you can convert your LLC to an S-Corp using Form 2553, and it's pretty easy to do. You just need to do it, I think 3 months, like the first 3 months of the year or the first 3 months after you open the LLC. You can choose to do it any year for that year, right? And the tax filing for that is a Form 1120S. So number 4 is a C-Corp. A C-Corp is very, very similar to a Canadian corporation. It's just a traditional US corporation with entity level taxation, like how a Canadian corporation is treated separately to a Canadian individual. It's a very good option for people who really want to get into the US market big and they want to really build up huge credibility. They want to raise US funds, possibly go into a venture capital round or something like huge that you want to do in the US soil, right? I would definitely recommend this for people who also want to hire US employees, because now you're setting up a proper structure and you can even make this a subsidiary of your Canadian corporation. So basically, you can have your C-Corp owned by a Canadian corporation, which is then owned by you, right? Now, in this case, I said earlier about the Canadian corporation that somebody can come after your Canadian assets, right? In this case, you're creating a separate corporation for the US and a separate one for Canada. So somebody was to sue you or come after you, they're only going to come after your US assets or your US cash, right? They're not going to come after your Canadian business as well. Another good thing with this is that if you want to reinvest your funds back into the US or back into your US company, you can definitely keep on doing that without ever bringing the funds into Canada, right? So you're never going to actually have to pay Canadian taxes unless you take that money into Canada, right? You just pay your US taxes and you keep your money there, keep reinvesting it, or buy a property or whatever you want to do in the US, right? An amazing option, especially if you're trying to move out of Canada the next couple of years. So what's not so good about a C-Corp? Well, first of all, the taxation over there is 21% for a C-Corp. That's assuming you're in a state-free you're in a tax-free state, right? Like Wyoming or Florida, where you don't have any state level tax. Just the federal tax in the US for a corporation is 21%. If you know your taxes a little bit, you might know that in Canada, this is much lower. So for example, in Ontario, it's about 12.5%. So you're paying 9% extra tax for no reason, right? So you do think about that for a little bit. Another downside is that compared to an LLC, a corporation does have more complicated tax filing. So you're paying your accountant a bit more. There's a little bit more complication to the tax filing as compared to a simple LLC or just doing it straight from your Canadian corporation where you don't have any US taxes at all, right? Third thing that's not so great about a C-Corp is that when you take those funds back into Canada, you pay yourself in Canada, you're going to have to withhold 15% of those taxes, right? And give those to the IRS. Now, the US-Canada tax treaty does allow that if you're owning that corporation through your Canadian corporation, you can only pay 5% of withholding taxes. That's a little bit better than paying 15%, right? Whatever you're paying, the 5% or the 15%, you do get foreign tax credits. That means when you do your corporate tax return in Canada, you can say that, hey, I paid this much percent or this many thousands of dollars to the US government, so I'm not going to pay that again. So you're not getting double tax, right? Which is something that you can do with an LLC in Canada, except the management fee thing, which is another video. Let's not get into that here. So the tax filing for a C-Corp is a Form 1120. That is the regular corporate tax return in the United States. You would also have to file a Form 5472, which is basically a US company owned by a Canadian. Missed filing this form or filing this a day late or making any errors in this form will get you an automatic $25,000 penalty. So be very, very, very careful with this. So my verdict here is that a C-Corp is a good idea if somebody's really serious about making it big into the US soil. Otherwise, it's probably not a great option for small and medium business. So the last corporate structure is an LP-GP structure. Maybe something you've never heard of, but it's a very good structure and it's a very robust structure to make sure you're not paying any double tax. Essentially, up on your screen, you can see that there is a US limited partnership owned by yourself as a Canadian, 99%. You're a limited partner, and then you've also got a 1% LLC that's a general partner. What does limited partner mean? What does general partner mean? I think it's going to complicate you. We can talk about that in a different video, right? But essentially, a partnership or a limited partnership in this case is one of the few structures that's taxed the same way, but in simplicity, a partnership is one of a few structures that's taxed the same way in Canada and the US, meaning the US taxes it as a partnership and Canada also taxes it as a partnership, which is perfect, right? The only thing with this setup is that there's multiple entities to open up. If you're holding it through a Canadian corporation, then there's another entity, right? So it's not a setup that you can start up on your own. You do need to speak to a cross-border accountant like us who can set this up for you. But for sure, it completely avoids double taxation because it's taxed the same way in both countries. Talking about tax, the tax you pay on this is 15% withholding when you're taking the profits back out to Canada. Again, if it's being held through a Canadian corporation, that can be reduced to 5%. The limited partnership also avoids any litigation coming to you in Canada. So it's only limited to any assets that you hold in the LP itself. So the tax filing for a LP is you have a Form 1065, which is a partnership return in the US. You fill that. There's no tax on the limited partnership itself. The tax is only when the distributions go out to the partners and then it's taxed. So for example, you made $100,000. You've just got the two partners, which is your LLC, a 1%, and yourself or your Canadian corporation as a 99%. It's got a Schedule K1. It's basically a form where you're declaring the distribution that you're paying out as the limited partnership. You're going to pay $99,000 to yourself, 1% to your LLC. It just has to be done that way. And it's only going to get taxed once it gets into their bank account. All that to say that you're not paying any taxes to the US government. There's hardly any double tax issues. And it's a very good option if you want to completely mitigate any US tax issues or double tax issues. And I highly recommend this for most people. So what's the bottom line then? I feel the structure that fits you completely depends on your goals in the US, right? If you're trying to make it real big, definitely go for a C-Corp. If you're a consultant or a service-based business and you've got nothing to do with stepping to the US, right? You want to make a bank account, but you don't want to have to do anything with going to the US. You can definitely do that with your Canadian corporation. And if you want to completely avoid double taxation, you want to keep it safe, but you also might want to physically be in the US, an LPGP structure is very good. An LLC is good for smaller businesses, assuming they're doing the management fee thing that I'm talking about in my deal, right? Otherwise, an LLC is not a great option for most Canadians. So that's a wrap. What I will say is you saw the diagram on the screen. That and many others are in my US tax saving blueprint, which has a lot of structures and everything that we've talked about. You can go through it on your own. If you want a link to that, I'm putting it in the description. Definitely check it out. You can download it for free and use it as you like. And if you want me to make another video on a similar topic or something that you didn't understand, let me know in the comments. I will definitely be responding to them. And if you have any specific scenario you want me to answer, definitely know in the comments. Thanks for watching. Hit that subscribe button, like the video, and I'll see you in the next one.